Hello, Vista Lakes area neighbors and friends. This is Len Nevin with Loyalty Home Group here at Keller Realty. I wanted to give you this week's update as far as where things are at regarding the real estate market. Obviously, we've had some interesting twists in just the overall market, so we're going to be talking real briefly about what's going on with the stock market as well, because it does affect real estate. And I'll just talk about that in a minute. But anyways, let's go into the numbers. So let me resize my screen here so you can see what I'm seeing. All right, so this is cool. So the average list price right now, we're sitting at $324,857. A week ago, so 1 week ago, we were at $313. So we're seeing that's a nice bump. So we're about $11,000 bump as far as the average list price. So we're starting to see some of the higher end properties hitting the market. And we're going to start seeing properties move in that direction, which is good from the list side. So now let's talk about average days on market. So average days on market did increase from 79 to 82, so we're up just a bit on average days on market, which is to be expected when you see a higher price point, because let's just be honest, this area isn't the average property sitting, or it's not sitting in that 200 price range. So the average sales price right now in the entire Phoenix market area is still under 250. It's like 242, 243, something like that, or maybe 244. So obviously we're above that, and so you're going to see those types of things. So how many properties on the market? A week ago we had 79 homes on the market. Today we had 78 homes on the market available for sale. Today we have 79. So in a week, properties have sold and one has been replaced. So we're seeing that kind of go up. How many properties have sold? So remember, this is a 30-day snapshot when we're saying how many properties have sold. So a week ago, we were talking about a 30-day snapshot of 36 homes that have closed. So not just under contract, but have closed, exchanged hands. Now we're at 40. So that's an increase of 4 homes from the previous 30 days. Now it's still down 40 or 23% from the previous 30 days. But a week ago, we were at a 42% decrease, and now we're only at a 23% decrease. So it's picking up from that perspective. One of the things cool about this report is you can kind of see here in the middle, you've got an idea as far as where all the homes are at. It's basically just a nice little chunk circle. So if you're in that area, this is who we're talking about. You can see all the properties that have gone under contract and sold. So let's talk real quick about the stock market. So let's refresh the screen. Right now as we speak, so it is 12:56 on February the 7th, Wednesday, February the 7th. Right now the Dow is up 50 points from its opening, so yesterday's close. Obviously, if we look at the 5-day trend, there was just been a nosedive. And so we saw on Monday like a 1,200 point loss, and everybody was like, "Oh my gosh, what's going on?" But look, we're starting to see it climb back up. What does that mean? What's going on? There's the volatility index. So let me see if I can find that real quick. This is the volatility index, right? So if we look at this from a multi-year perspective, of course that's not giving me what I'm looking for. Basically what the volatility index is what they call the fear factor. When that spikes up, that's usually when you see a sell-off. So there was and I wish I could see a lifetime one for that, but I was reading an article recently, and they were talking about, when has that thing spiked? So let's just look at the last 20 years. So we're 2018. Let's go all the way back to 1998. In 2011, we saw the volatility index spike. What happened right after that in real estate? We hit rock bottom. So what happens is investors and people who this is their lives, right? So I'm speaking completely in layman's terms regarding how I look at this. So your typical investor, they're always looking at real estate and stocks. Real estate and stocks. Those are kind of the two big places where people put a lot of money. That's where they put a lot of their investment. And what are they going to be doing with it? And so in 2011, we saw the volatility index kick up, and we also saw that be the bottom of the real estate market. So everything has kind of gone uphill from there. So when you look at any charts related to pricing in real estate, it's gone. It has not dipped really. It's flattened out a little bit. We've had some peaks and valleys, but it's been on a steady rise for basically since 2011. So that's a 7-year run up, which is great. We're finally, we've seen almost every home. I still run into houses where I talk to people and they still haven't been able to make up, to the height of the market, which was like 2006, 2007. So there's still homes underwater, but I mean, nothing like what we were seeing back in 2011. I mean, 2011, every house was underwater. Like I would say almost 100% of the houses were underwater. 2008. So 2008, the volatility index peaked. Now, why did that peak then? Why did we see a stock market crash? If we look at the max line here, let's see how much it'll give me. So that was right here in 2008. What happened on that day when it dropped down to 66.26? Crazy day, 777 point drop on the day of, we're right around that point. That was the day that, I think it was the day after all those big investment firms just folded and the banks were going to be bailed out, and it was when the credit market just came tumbling, and our whole world, everything we knew ended that day for a lot of people. The dip we had in 2011, that was when we lost our AAA credit rating. Obviously we're working, now it's just moved up since then. Before that was the dot-com bust. So when we're looking at the volatility index, unfortunately it's not giving me this, the 5-year that I'm looking for, but the dot-com bust was probably right around that 2000 mark. Well, that was actually the beginning of our first real estate run-up. So what am I trying to say? The only reason why we're seeing anything goofy with the stock market, so let me get back to that. The only reason why we're seeing anything goofy, for a 1-year period here, so here's the last year, started, February 7th, 1 year ago today, we were at 20,000 on the Dow. Now we're at 24. So the only reason why we're seeing anything going down is because interest rates, right? They're trying to curb inflation, all those other things, and it's a reality. Interest rates are going up. So purchasers, home buyers, things like that, what does that mean? The only thing it means is that if you could afford, let's just say for easy math, you could afford a $200,000 home, any rate increase, so like if the rate was to bump up a full percent, that's going to mean an extra $120 a month that you'd have to add to your mortgage payment. So if you're $400,000, that's an extra $240,000. And so if you once qualified for $200,000, now you only qualify for $180,000. If you qualified for $400,000, now you only qualify for $360,000. So you can see that it stinks, but it's not the end of the world. I mean, we're still at historic real estate, interest rates, which is phenomenal. So what does that mean for real estate? Well, I mean, people need to buy, people need to sell. We still have a housing shortage. We don't have builders building enough homes still based off of population growth. Jobs are still strong. The market is, as we see, bouncing back up, after 5 days. And it's not like, wow, we've rebounded and everything, but it just basically means that, you look at that fear index again, the volatility index, and it was just, peaked up, and now it's kind of, people have settled down. And so we're always keeping an eye on it is basically the end of the story. Home values, real estate is steady. It's consistent. I had some conversations with people back in 2011. I remember having a conversation with a gentleman, and I asked him, I said, so just out of curiosity, how upside down in your home are you? And he was in real estate, so obviously he knew the math and he was able to do the research. And he came back to me a couple hours later, and he's like, would you believe I'm about $220,000 upside down? I'm like, oh my gosh, what are you gonna do? He's like, nothing. I'm not gonna do anything. This is my house. He's like, yeah, I'm under about $220,000, but it's my house. This is my home. I don't plan on moving. This is where my family is. And he's like, and if push came to shove and things got bad, obviously I couldn't sell it because I owe more than what the house is worth. He's like, but my payment's only $1,600, and I could rent it out for $2,000 in a heartbeat. Let that sink in for a second. $220,000 underwater, but he could rent it for $400 plus, cash flow positive every single month if he needed, if push came to shove and he had to leave that house. So was that an asset or a liability? Depends on which way you look at it. Now, fast forward all these years, he actually did just recently, from the conversation I had with this person recently, he just recently sold the house for a profit above what it was, that year ago, because we went back to that conversation. And so he's been able to sell that house for more than what he owed and more than what that deficit was. Obviously, that pig number that we were looking at. So he held on to it. So if you're looking at real estate as a long-term thing, the market's always going to do this. The stock market's always going to do this. It's up and down. It's always. But if you're looking at it from a long-term perspective, why do you think the banks give you a 30-year loan? They're not expecting you to flip it in a year. Our market could come upside down right now, but if you live in your home, you have the school that you want to have, your job is solid, that's really what we should be looking at, not so much as real estate, is jobs. How are jobs? Are people employed? Is the whole world going to come tumbling around us? I look at all this and I say, maybe things will slow down a little bit, but little Johnny's still going to graduate from college, and he's going to bring, his girlfriend or whatever, and they're going to get married, and they're going to want their own place. They're going to have kids. They're going to need their own place. Grandma's going to need to downsize. Person who bought a starter home that's not suited for a family is going to need to sell that to get something bigger. There's always the move up. There's always the move down. Life goes on. People get married. I know people in the wedding industry, and they're super, super busy. People are always getting married. I don't see any slowdown in the hospitals of people having babies. Life goes on, and needs continue. And that's going to keep moving our real estate market forward, in my opinion. What do I expect for this year? I expect that because we're still seeing a low inventory issue right now, what I expect to see for this year is really just stability. It may not, no huge spikes in prices. We may see some adjustments in prices because of interest rates. Because remember, now I've been pre-qualified for $400,000 today, but the interest rate goes up. Well, I still want that $400,000 house. It sucks that the interest rate went up and now I can only afford it because maybe it only goes up a half a point. So now my pre-qualification goes from $400,000 to $380,000. So I'm looking at the $400,000 house still, because that's where buyers are at. They will absolutely have a hard time going and saying, well, I guess I'll go look at $380,000 houses. But in the back of their mind, they're like, I really like that $400,000 house. So they're going to try to get the $400,000 house down to $380,000. Will we see that big of a swing? I don't think so. But you'll see more negotiations. You're going to continue to see, we still see 75% of our buyers are coming in under $300,000 asking for concessions. FHAs, you can have a $310,000 or $314,000, I think is what I calculated out, $315,000 home with an FHA purchase, and 99% of those are probably coming in with some sort of seller concession, so the seller kicking back in. We're going to continue to see that. So it's going to be healthy competition. I still expect to see prices going up. We're already seeing it. People asking more, so we're up. $324,000 as the average list price, but we're still down from 30 days ago. 30 days ago, that was higher. It's moving back in that direction for the properties that we're asking. So we'll just wait and see. But I don't think the end of the world is coming. Sorry, this video is a little bit longer than usual. But, I've had a lot of people asking me this week, like with the stock market, what's going on. And I just wanted to give a little bit of my opinion about how it affects the housing market. And really, it has nothing to do with the housing market so much, except for the fact that it's interest rates, which means cars are going to be more expensive. Your car payment's going to go up if you get a new one. Housing is going to go up a little bit if you need a new one. If you're thinking about refinancing, do it now. Don't wait, because rates will absolutely continue to move in a higher direction. So if you've been on the fence about refinancing, call your lender today and get that done. If you've been thinking about buying a house and maybe putting your house on the sale, up for sale, call your realtor. Get this, get it moving. I think it's a good time to get this stuff done. People are looking for houses, so if you're moving up, there's more options in the higher price range, and open up your home for somebody who's in the lower price range, versus where you're looking to go. So that's my 2 cents on it. I'm happy to see what's going on in our neighborhood with the price, the average price moving back up. We don't want to see that decreasing seasonally. So seasonally, this is exactly what we would want to see. Average days on market with a 3-day extra increase. I'll be keeping an eye on that probably the most. Days on market's going to be the biggest thing we keep an eye on. Traditionally, the higher the days on the market, the more you'll see prices go down. So that old, there's that adage where people say, well, I'll start high and I can always come down lower. Well, that always will cost you every time. It's always better to just price right, just a smidge above market value and stay strong. And, I think even with the bad negotiating, if you've got a bad agent who doesn't know how to negotiate, they can still, on average, it's still closing out at like 98.2% of asking price. So it's not, the market is dictating, being able to help you get your price up. That's all I got. We'll talk to you again next week. Let's see where these things continue to go. I'd like to see with our spring market, more homes continuing to sell. I'd like to see that average days on market drop. If it continues to go up higher, what that's going to mean is our average sales price is most likely going to, it's not going to shoot through the roof is what I'm anticipating. But I still expect normal. This is a normal real estate market. Let's just get real about it. I expect to see just normal climbing. There's like a national average of the average, home price, and it goes from like 1920 all the way to now. And basically, that trend line is 3 to 4% is what they typically want for average increase in real estate prices. So if we end up at that line, who cares? That's good. It matches wage increases, all that other stuff, and it makes housing more affordable for everybody. And who doesn't want to own their home? So let's make that happen. So that's our goal. Thanks for watching. Like I said, sorry this went a little bit longer than usual. Feel free to reach out with any questions. And like I said, if you have specific questions, call your realtor. Thanks again.